You know how I always warn people, and I always say there are certain stocks that I don't even put on my buy list, even though they should be, because they're so inexpensive, and I know people are going to gravitate and buy them. I would stake my life on it that if we could get in a room with all the tens of thousands of partners and compare everybody's portfolio, I'd stake my life on those people that own the most expensive stocks you can own, and all their stocks are the really stocks that are $50 and up a share, even the $300 stocks, $350 stocks. I guarantee you that they have suffered far less than everybody else. And I think it's important now to point that out. Some of you had stocks that you bought at $4 that are now penny stocks that are writing me say, I can't find the listing. It's because it's a penny stock. Or the listing changed. It's a penny stock. You can't, you're never going to recover that. You're never going to recover that. I had somebody call about a stock. I didn't even know this. They emailed me last week. I didn't even know this, that there's an energy stock that I had on my sell list several years ago, and never back on my buy list. And now it's been off my broad list. But they still owned it. And they wanted to know what to do with it. I think it was worth like 40 cents or 21 cents. I said, I don't know. You do whatever you want. I don't know. You're never going to get it back. It's never going to come back to where it was. So what I would like to say is you probably bought it when it was $1.50 and didn't care that it wasn't on my buy list. I would tell you that the more expensive the stock is, generally, not always, definitely not always, but the old established companies that are very expensive, they're great companies. And that's why, because they have an intrinsic value to them that maybe only professional traders realize. And I wouldn't shy away from them. And I'm going to say what I always say, though nobody cares and believes me, but I'll say it anyway. One has to believe that the reason you invest $500 is to earn money on it. And for some reason, you believe that if you make 10% on a $10 stock, that you did really, really well. But if you make 10% on the $250 stock, you think that's crazy. And you totally forget that it's the same $500 that you invested. So when you break it down, both of those purchases earned you 10%. Do you really care that you only had 2 stocks in the one, and whatever you had, I forgot what I used as an analogy, on the other? Maybe it was 50 or 100 stock shares. Do you care? What's the difference? There is no difference. The difference is on the $250 stock, it's probably far more stable, been around a long time, and well established. But I'm not buying that. That's expensive. Yeah, it's expensive. Well, we are entering an era where expensive stocks are going to be more and more prevalent. Why? Because we're not going to be buying back. We're going to be buying back some stocks later, but there's not going to be the massive amounts of money put into one stock. There is going to be no interest by companies to split their stock and just to let it run up. which has been the trend for the last 10 years. But now this trend is going to hit so many other companies that are going to say, yeah, you know what? Let's just let it go. Whatever it is, it is. We'll let the market dictate it. And we're going to see more and more of that. It's not going to be any harder to invest. The perceived notion in your mind may be it's harder to invest because you're looking for cheap stocks. And the more you look, eventually you will find them. And they're going to be lower and lower and lower and lower quality of what you're buying. And I would rather buy quality than buy cheap. And if all of you can get your minds focused on that, you will be far better off in the long run from a long-term investing perspective than you are right now. Just saying. That doesn't pertain to mutual funds. Mutual funds kind of revalue and change things every year. Right? How many of you have lost money in mutual funds but still get a 1099 that you had to pay tax on? That's because they take their capital gains and other things that all the stockholders, all the shareholders are going to be responsible for. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.